Hey traders, Raghee here. So we talked a lot about Apple and corn in the previous video, and this comes straight from the latest issue of the Countdown Trader, the trade corn, not Apple. And look, I know I'm kind of making fun a little bit with our fruits and vegetables here. However, corn is coming back into a zone, and let's talk about the zone that it's coming back into and what it means for our potential corn trade and two ways to play this. So first of all, corn is what I call a yellow market. And you'll see down here at the bottom, the structure of corn is yellow. What that means is the 8, 13, 21 exponential moving averages are not signaling bullish momentum. So 8, 13, 21. And the 34 is basically sideways. So we don't have a bearish market. We don't have a weak market. We have a market that's basically moving sideways. And the blue colored candles, we call the blue grab candles, are also indicating a lot of that neutral sentiment. But look at the candles that are surrounding it. They're green candles. In a bullish environment, the candles will be green. If they're dark green, that's a down close. If they're light green, that's an up close. That's how I differentiate between an up and down close with the shade. But we have about 3 blue grab candles. Now, if you notice, we're coming into the same layer that we've had support at before. And by the way, this anchored volume weighted average price is anchored to the first of the year. So this is the VWAP for the first of the year 2021. And I would anticipate there would be some support in that area. Previous lows, VWAP, and yes, we're sitting inside the wave. So here is a little tip. When the previous pullback that we have in here had blue grab candles, we want to be a little bit more conservative on the next pullback. Meaning, I don't really want to start looking for the buy until we get to the 34 EMA on the close. And that's pretty much what we're closing in on here. Some interesting volume levels. I wish we had a little bit more to go on. I mean, it's actually dropping as we fall into this range. However, as long as we stay above 527, this trend is intact. And if we break 527, it just means I'm going to be looking for oversold buys, likely from this Darvis level right in here. So keep in mind that if we have a move through the wave, it's actually going to land really close to this previous low in this Darvis level. It's still a buy. So I'm not going to get shaken loose that easily. One way to keep from getting shaken loose is to have options. And what I would say is, for those of you that maybe don't trade the ZC, the corn futures, look at the CORN ETF. So as the Z, and this is where a lot of folks miss the nuance of the entry. My entry is not based on the lines and levels of CORN, but rather the futures contract, the ZC futures contract. You don't have to be a futures trader. You're just tracking the futures so that you can trade a contract, the ETF, that's based on that futures contract. So why not look at the source? So what we have here is an opportunity to get long based upon the support of the wave. And I'm going to wait for the timing from here and buy an at the money call. We'll get into more details on this in the premium video, but hey, let's follow up on trade Apple, not corn. And here we are getting into that really nice zone in corn. And that's really what we want to focus on right there. All right, gang, I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me